If you are a solo business owner and are looking to not only supercharge your retirement savings, but also save a ton of money on taxes, this episode is for you. We are breaking down the solo 401k, what it is, how it works, and be sure to stick around till the end because we're going to talk about how you can add the mega backdoor Roth feature to your own solo 401k plan. You don't want to miss it. Hey everyone, this is John Boyd, host of the Emerging Wealth Podcast. Thanks for joining us and making us a part of your week. Before we dive in, if you're finding value in our content, please give us a like. This helps us reach more listeners and share quality financial education. Next, I'd recommend visiting our website at www.modernwealth.com. Head on over to our Learning Center. It's packed with videos and articles designed to help you optimize your wealth. While you're there, consider subscribing to our newsletter. Thanks again for being with us. Now let's dive into this week's episode. Welcome to another episode of the Emerging Wealth Podcast. This is an episode I've been putting off, quite frankly, for too long. I've finally gotten around to recording it because with it being the end of the year, as of the recording of this video, it's Thanksgiving week actually. I've been doing a ton of last minute end of year planning for new clients of the firm. And one of the issues that I've been consistently addressing with our business owner clients is properly implementing a solo 401k into their tax and retirement plan and really optimizing their small business retirement plans, period. Solo 401k plans are a super powerful tool for self-employed individuals and allow for you to really supercharge your retirement savings and potentially save a ton in taxes. Really, over the last decade or so, it has gotten much easier to set up your own solo 401k plan. But it's also gotten a lot easier to screw it up too. And despite it getting easier, there's tons of misconceptions on how these plans work and how to maximize setting it up. So let's go ahead and dive into it because we have a lot to cover. So what even is a solo 401k plan? Well, a solo 401k is exactly what it sounds. It is a one participant 401k plan. If you have W-2 employees that work at your business, you are not going to be eligible to set up a solo 401k plan. The exception to this is if your spouse is an employee. If it's just you and your spouse, it's a proverbial mom and pop shop, whatever you're doing, then your spouse can participate in that solo 401k plan. Now, the reason why it would behoove you to set up a solo 401k plan in the first place is that you have the potential to put up to $66,000 in 2023. That number is going up to $68,000 in 2024. Plus, of course, you get a catch-up contribution if you're over 50. That's big bucks right there. And that's obviously significantly higher than what you could put away in a traditional IRA. And if you're listening to this and you're thinking, well, why wouldn't I just set up a SEP IRA? A SEP IRA has the same limits. Well, you're going to find out why the solo 401k, in many cases, not all, but in many cases, is the better option and why so many people, including myself, get excited about them. So why is the solo 401k plan the preferred retirement plan for so many solo business owners? What makes it so unique and better than, let's say, a SEP IRA? So there's obviously a couple different reasons for this, but let's first start off with contributions. Having a solo 401k gives you access to two distinct contribution types: employee contributions and employer contributions. If you have a SEP IRA, you can only make employer contributions. And that's either going to be 25% of your salary if you are an S Corp, or 20% of net income minus half of your self-employment taxes if you are just a sole proprietor. With a solo 401k, you get that employer contribution that the SEP gets, plus you get the employee contribution, which is $22,500 in 2023. So here is how it would work if you were a S Corp paying yourself a $50,000 salary. you would be able to contribute $22,500 plus, because you are an S Corp, you get to take 25% of your salary as employer contributions. So 25% of $50,000 is $12,500. $12,500 plus $22,500 allows you to put in $35,000 into a solo 401k. And again, as a solo business, you are playing both sides here. You are the employee and the employer in this scenario. Now, for comparison, if you had a SEP IRA in this exact same scenario, you would only get to contribute $12,500. You couldn't do the employee contribution of $22,500. So pretty cool, right? That's a lot of extra money that you could put away for retirement and get a tax deduction on with a solo 401k. But we're not done yet. With the solo 401k, you can customize them to allow for the mega backdoor Roth. Again, using this example of a $50,000 salary as a solo S Corp, we can contribute into the plan as much as we make in this example. So again, let's break that down. $50,000 salary. So that's going to be $22,500 employee limit. So $22,500 there. Plus $25,000 employee deferral. 25% of $50,000 is $12,500. So we're at $35,000. Again, our salary is 50. We're already up to 35. We can't put in more than what we make. So we can go ahead and put in another $15,000 into the after-tax bucket of our solo 401k plan and then convert that over to a Roth 401k. So we just put away our entire $50,000 salary for retirement and managed to get $15,000 of that into a mega backdoor Roth. That's a ton of money. So before we dive in on how we actually set all this up, because I know this topic is confusing, one question that I know someone out there is thinking is, well, what if I'm not an S Corp? What if I'm just a sole prop LLC who files a Schedule C? Again, keep in mind, just because you are a solo business owner who's an LLC, that doesn't change anything from a tax perspective. You are a sole proprietor for tax purposes. If that is you, then the employer limit is not going to be 25% of your salary. It is going to be 20% of your net income minus the 1/2 self-employment taxes. The other question someone might be thinking is, well, I am an S Corp, but my net revenue is $200,000, but I pay myself a $50,000 salary. Can I do the calculation for this based on my $200,000 net revenue and not the $50,000 salary? And the answer to that is no. You would need to do the contribution calculations based on that $50,000 salary. So again, you can see here, if you are a solo S Corp here with a solo 401k, one of the dilemmas that we have to plan for business owners is how much of that salary to draw, because it's going to be a balancing act. Higher salary means higher self-employment taxes, but it also means that the greater potential to put more into that solo 401k plan. With a salary of $50,000, we can't necessarily max out the 401k. The total max for this year in 2023 is $66,000. And with a $50,000 salary, we're not going to be able to hit that amount. So again, that would require us to do a little bit more planning here to weigh the pros and cons on increasing that salary in this example. So again, guys, I know this is a tough topic, but bottom line is a solo 401k allows you to stuff more money away for retirement and potentially save more in taxes versus many other retirement plans. Again, this isn't always the case, but in many cases, this is what I find. The 4 other benefits of a solo 401k, other than it being easier to put away a lot of money into it, are as follows. Number one is that mega backdoor Roth feature. So this is something that you'd have to customize, and we're going to talk about in a little bit, but you can set up your solo 401k to have 3 distinct buckets within it: a pre-tax solo 401k account, an after-tax solo 401k, and of course a Roth solo 401k account. Because you have all 3 of these within the same plan, you can execute a mega backdoor Roth, and we'll talk about the logistics of making that happen in a little bit. The other benefit of a solo 401k is that you allow yourself the ability to do a normal old-fashioned backdoor Roth IRA. Because remember, the backdoor Roth IRA strategy is not taxable and allows you to contribute to a Roth IRA despite making over the income limits for it. So if you set up a SEP IRA or even a simple IRA, you are going to be subject to the pro rata rule, and your backdoor Roth IRA conversion is now taxable. Money that is in your solo 401k plan is not subject to the pro rata rule. So in theory, you could max out your solo 401k and still do the backdoor Roth IRA because all of your money is in theory in your solo 401k plan. Again, you want to make sure that you don't have pre-tax IRAs floating out there. But again, you could technically evade the pro rata rule with a solo 401k plan. Third big benefit of a solo 401k is that you can technically do loans with a solo 401k. You can borrow up to 50% of the vested balance up to a maximum limit of $50,000. Again, I'm not condoning people just casually have outstanding loans on their 401ks, but it can be a nice safety valve to have, and some people like even having the option. Finally, you can technically buy rental properties and other real estate assets with the solo 401k. Again, this is a whole other can of worms and is much more complex than just simply having a solo 401k that allows for it. There's other components that go into this, but in the most technical sense, you can, in theory, set up a solo 401k plan and go buy a rental property with it. Again, it can technically be done, but again, that's an entire separate can of worms. But some people are drawn to having a solo 401k because of the ability to do that. So after hearing all of this, if you're fired up about setting up a solo 401k, you want all these neat bells and whistles, what you don't want to do is just simply Google solo 401k account. Because what is going to happen is the major custodians or brokerage firms are going to pop up, and they are going to tell you how you can set up a free solo 401k with them. This is where a lot of people that do have solo 401ks go wrong, in my opinion. So let's say you open an account at one of these major brokerage firms or custodians. What is going to happen is you are going to fill out an application, and they are going to get you set up with a solo 401k adoption agreement. The adoption agreement is effectively going to make your solo 401k legit in the eyes of the IRS. The problem with this is that these firms have pretty cookie cutter adoption agreements. So for example, if you wanted to do a Roth solo 401k, that probably isn't going to be in your cookie cutter adoption agreement. So you can't do it. If you wanted to have the ability to do the mega backdoor Roth, it's probably not going to be in that standard adoption agreement. If you wanted to do solo 401k loans, buy real estate, right, all that other stuff, it's probably not going to be laid out in your adoption agreement. Again, these standardized adoption agreements lay out what you can and cannot do within the plan. And because they are cookie cutter, they aren't going to allow for these bonus features most of the time. So bottom line is, while these standardized agreements are free in many cases, it is going to be relatively restrictive on what you can do. But let's just say, for the sake of argument here, you did just set up a solo 401k at one of these firms using their cookie cutter adoption agreement. I mean, what would happen? Well, nothing terrible would happen. I mean, you would just have a pretty limited plan and you would be able to make employee and employer contributions. Life would go on, but this is where people get bit in the behind. You see, when you have a solo 401k plan, if the account balance is below $250,000, you do not have to file Form 5500. This is a form that the Department of Labor requires you to file if your account balance is over $250,000. If your balance is over that within that solo 401k, you need to file it. The brokerage firm that you opened up that solo 401k with and set you up with your standard adoption agreement is not going to do it for you. Failing to file Form 5500, if you have to file it, can result in penalties up to $150,000. It is significant, guys. It's a big deal, and you don't want to screw up your Form 5500 filing. Again, you don't need to do it unless the balance is over $250,000. The exception to this is if you terminate the plan, if you decide to terminate your solo 401k, then you need to file Form 5500, and then you can't reopen another 401k plan for another 12 months. So just to recap, if you set up a solo 401k with a brokerage firm using their standardized adoption agreements, these are the documents that pretty much lay out what you can and cannot do within the plan. You are likely going to be handcuffed regarding what you can do with it. And then on top of that, you are going to get zero help with any regulatory filings such as Form 5500. So what do you do if you want a solo 401k with all those features that we talked about, like the mega backdoor Roth, the Roth solo 401k loans, etc.? Well, you are going to effectively need to create a custom solo 401k adoption agreement. And there are firms that do this. So for example, mysolo401k.net, we are not affiliated with them. Just an example. They are a firm where you can go pay a few $100 and they'll go ahead and draft your custom adoption agreement that allows for all these features. Plus, on top of that, they'll help you with Form 5500 filings, plus 1099Rs if needed, etc. Again, that's only if they need to be filed. But again, you have somebody to at least partner with you to help file them. If you are someone who already has a solo 401k plan, then you need to do what is called a restatement of those documents in order to effectively add those features to your existing 401k plan. Going through this process of setting up a custom adoption agreement for a new solo 401k plan is also likely going to generate a brand new EIN number associated with that solo. And if you read the paperwork for this, you are going to see that your solo 401k, at the end of the day, when you pop the hood open, is really a retirement trust that is a tax-exempt entity. All this means is that you have an EIN that is technically for a trust. And this allows you to, in theory, be able to open up accounts at tons of different financial institutions, like a checking account specifically for your retirement trust or solo 401k. Now, that account on its surface might just be a trust checking account with a bank, but it's really a solo 401k. That's one step in how people are technically able to buy properties and things like that with money in a solo 401k plan. But bottom line is, I tell you all this because getting that EIN number and custom adoption agreement is going to allow you to go open up the accounts that you need to go execute a mega backdoor Roth 401k, etc. Now, once you have this adoption agreement set up, you then can go to a brokerage firm of your choice with your adoption agreement to establish your solo 401k accounts. If you do the mega backdoor Roth, you are going to end up with 3 accounts. One account is going to be a pre-tax account, one account is going to be an after-tax account, and one account is going to be a Roth account. Once you have all 3 of these open, you can very easily do your mega backdoor Roth. So going back to that $50K salary example, you can put in $35,000 pre-tax employee contribution plus the employer contribution. into the pre-tax side of that 401k plan. And then you're going to go ahead and put in $15,000 into that after-tax account and then immediately move it over to the Roth 401k to complete the conversion. So in conclusion, guys, if you are still with me, I greatly appreciate it because I know this episode has progressively gotten more and more advanced as we've gone through. But bottom line is a solo 401k is a really powerful retirement savings tool as a solo business owner. After listening to today's episode, you could probably see why so many business owners prefer this as their preferred retirement plan. Even without getting a custom adoption agreement, right? Because all that stuff, right? The mega backdoor Roth, the loan features, right? All that's optional. Even if you just had that cookie cutter solo 401k plan, you can see how powerful it is. Being able to contribute both employee and employer contributions to the retirement plan. That's a game changer. So if you are a solo business owner and you need help figuring out if a solo 401k makes sense, or you already have a solo 401k and you need to find out how to optimize it, reach out to us at www.modernwealth.com. This is something that we do all the time for our solo business owner clients. As a reminder, everything on today's podcast was general education only and not deemed to be specific investment, tax, or legal advice. If you need specific guidance, you can reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. It's been a lot of fun, guys, and I'll see you next time.